The S&P 500, GSPC, fell 1.9%, or points, as of market close, with the materials and industrials sectors leading declines. The Dow, DJI, sank %, or points, while the Nasdaq, IXIC, fell 2.5%, or points. U.S. Treasury yields, which move inversely to prices, broadly declined Friday, with the yield on the 10-year note dipping below that of the shorter-term 3-month bill for the first time since 2007 during intraday trading. Buying into treasuries on the longer end of the curve sent the yield on the benchmark 10-year note as low as %. Yield curve inversions are widely monitored as potential recessionary signals. IHS Markit released its preliminary results for the March U.S. Manufacturing Purchasing Managers Index Friday morning, with the reading falling to a 21-month low of 52.5. This was below expectations for 53.5, and February's reading of 53. Service sector PMI slipped to 54.8 from 56, and came in below expectations of 55.5. Each reading, however, held above the key level of 50, indicating expansion. The services sector in Germany, however, remained in expansionary territory with a reading of 54.9. This was slightly ahead of expectations of 54.9 but at the lowest level in 2 months. New export orders for German manufactured goods fell for the 7th straight month and at their fastest pace since 2012. IHS Markit attributed this to weaker demand in the auto sector and delayed decision-making due to uncertainty over Brexit and relations. The pound edged up against the dollar, GBP USD = X, to above dollar after the EU granted the extension. Tiffany, TIF, +%, reported weak results for the holiday quarter as the luxury jewelry seller's total comparable same-store sales came in flat during the fourth quarter from the year-ago period. Adjusted earnings of were 7 cents better than expected, and net sales of billion were in line with expectations. Tiffany said it expects net sales to decline in the first half of the year due to lower foreign tourism spending, but sees an increase in net sales in the low single digits for the full year fiscal 2019. The stock rebounded after falling in early trading. Existing home sales surged to a seasonally adjusted annual pace of million in February, the National Association of Realtors said on Friday. This was 11.8% higher than January's reading, which was downwardly revised to million. February's month-over-month gain was the largest since December 2015. A powerful combination of lower mortgage rates, more inventory, rising income, and higher consumer confidence is driving the sales rebound, Lawrence Yun, NAR's chief economist, wrote in a statement. Emily McCormick is a reporter for Newspulse Finance. Follow her on Twitter, at Emily_MCCK. Follow Newspulse Finance on Twitter, Facebook, Instagram, Flipboard, LinkedIn, and Reddit. S&P 500, Nasdaq close at highest level in 5 months. Boeing 737 MAX groundings, pressure, U.S. economic data, Wells Fargo beer sales are lukewarm and pot could be part of the problem. Recession risks remain muted as fear tracks higher, report.